Hi. Hello. Good evening. Oh, thank you, ASAP. 95. There's my guest. Okay. I need to do the same, ASAP 95. Okay, so good evening, everyone, and welcome to the Becky Brown Girl Show. I'm your host, Becky Brown Girl, and tonight we're talking taxes. Yay, taxes! um, I am certainly not the expert on taxes. However, I did invite a seasoned professional to join me this evening as my guest to give you an overview on taxes and answer a few questions that I asked her. So if you have any questions regarding taxes, please put them in the chat, and I will try to direct those to her as well. So, how many of you have already filed? Because the tax deadline is quickly approaching April 15th, and you know, you do not want to mess with the IRS, right? Anyway, so I'm gonna go ahead and introduce Miss Shauna. Shauna is the founder and owner of LaPetiteTaxDame LLC. She began preparing taxes after graduating Lincoln University in 2001. Shout out to HBCUs. Shauna began her career as an auditor with the U.S. Postal Service of the Inspector General. She also worked for Vicinity Energy as an accountant, and over the last 20 years has focused on her love for taxes. I think she might be the only person that loves taxes, but we'll see. Anyway, in addition to holding multiple degrees, she's licensed by the Internal Revenue Service as an enrolled agent. And in this capacity, she is able to represent her clients before the IRS. She keeps abreast of the ever-changing laws and focuses her attention on her firm's developing role in the tax field and its expanding clientele who require help. She works with both individuals and small businesses. And without further ado, allow me to add Shauna to the conversation. On momentarily. Are you there, Shauna?
Hello. Let me see. I'm just
Beautiful
trying
lady.
to, trying to get a good picture. Let's see.
Is there something on top of, but we don't want to cover your beautiful
Okay, I
face.
got
Something
something
is,
holding it.
oh,
Let's see.
oh yeah, that's what it
Let's see if
is. Okay.
I turn it around. Will it?
Nope,
Okay.
nope, can't see you.
No?
No,
Okay.
ma'am. You
I'm
you
sorry. I'm
actually
sorry. I'm
had the
sorry.
right orientation. Before it was just whatever's holding it was covering your face up a little bit. But okay, that looks great.
Oh,
It's
okay.
perfect, right? Doesn't she look beautiful? Okay, so
Hi, everyone.
welcome, Shauna. So I did kind of, give a brief background for you, but I don't know if there's anything else you'd like to add before we get into these questions. Follow Shauna at La Petite Tax Dame on IG.
Yeah. On IG, Instagram, and X.
Okay. Oh, did you mean Facebook?
Oh,
I said
oh, yeah.
IG.
Yeah, sorry. Yeah, Instagram, Facebook, and X.
Okay. Perfect. And if you can do me a favor when you have a chance, you don't have to do it at this moment, but before you leave, make sure you put it in the chat. I'm gonna tag you later anyway. So welcome again. And um, so somebody had suggested, because I'm always, trying to come up with new topics, and there's only so many, relationship topics you can discuss. I think people might be relationshiped out. But anyway,
Well,
the
taxes and relationship goes together.
it does. It do. Um, so Yeah, and because we're approaching the the deadline, I did reach out to Shauna to see if she might be available last week, but I did kind of ask her on short notice. So but it's still before the deadline, so hopefully you'll learn something new and valuable tonight, that if you haven't already filed your taxes, you can apply to your filing before the deadline, right?
Before, yes.
Okay. So with that said, I just kind of wanted to start out just explaining the different, well, rather to have you explain the different type of taxes that we, sort of have to pay or may encounter, um, over the course of our lives.
When folks talk about taxes, I think they only are thinking income tax. But there are so many different types of taxes. You have inheritance tax when someone passes away, and you have the gift tax. There's a liquor tax. There's sales tax. There's property taxes, of course. You have corporate taxes. So there's many different types of taxes, and I think people tend to just lump it all together, like, oh, I got to pay my taxes.
It,
um
indeed.
yeah, yeah, but yeah, there's just many different types of taxes, and all may not apply to each taxpayer.
Yep. Okay. So with that said, now remember, folks, those who were on already and who may have just joined, please put any questions that you might have for Shauna in the chat. So, because I have some, but they may not address your particular concern. Now, she is a business owner, so if you want to get real specific, then you need to holler at her. But don't think she's going to do your taxes before. When is the
Before April
15th? Monday?
15th, yes. I am pulling all-nighters for the next couple of days, so.
But she's a very busy woman, so my point is, keep them general, and if you have any further inquiries beyond that, then you can reach out to her directly following the show. So with that said, somebody in the comments mentioned earlier that they needed to fill out the extension form, um, as they've not yet filed. So, can you talk a little bit more about filing an extension, um,
Yes.
for the before the deadline, and are there any penalties or late fees for filing the extension?
Yes. So the again, the deadline is April 15th. I always tell people, if you can, don't rush to get your taxes prepared if you don't have everything. So I would say file an extension. So the form is called the 4868. If you have a tax preparer already, they probably can easily file electronic extension for you. Or you could go on IRS website. IRS does have a free e-file where you can do the online extension for, I believe it's for any taxpayer making 79,000 or less. Um, but you can also, you can Google the form, you can fill it out, and you can just have it postmarked by the 15th and mailed.
So, what if is it a different form if it's for an income above that?
Oh, no, no. So the 79,000 was just for the e-file of the form, but anyone can just, go ahead and print out the form, fill it out, and then mail it.
Okay, but it has to be postmarked by the 15th.
Correct, correct. And just want to, let everybody know, because everyone talks about extensions, but an extension is only an extension of time to file, not extension of time to pay. So if you file an extension and you don't make a payment with that extension, when let's say you prepare your taxes in May or June, and you end up owing IRS, IRS will backdate any interest and penalties starting April 16th, the day after it was actually due.
Do you know sort of what the rate is of I mean, I obviously the later you
Mhm.
file, the more it's going to increase, but is there like a percentage or
Yes. So, and I did made some notes for myself. But yes, the penalty for late filing, and I'll just say this: the failure to file penalty is much greater than the failure to pay penalty. So many people will say, you know what, I'm not going to file because I owe anyway.
Mhm.
So, the failure to file is 5% um, um, of any unpaid taxes up to 25%. And sometimes that can become even higher than the actual tax.
Right.
The failure to pay penalty is a 0.5%.
Okay.
Um, um, yeah, yeah. So I would definitely say, go ahead and file.
Mhm.
And then you could work out if you need to do an installment agreement or, how you need to pay IRS back. But, always you want to go ahead and file.
Yeah. So for me, personally, I'm just gonna take liberty. I usually file earlier, and this year I did not do that, and now I'm like, yikes.
Mm-hmm, mm-hmm, mm-hmm.
So, but I'm gonna see if I might be able to, get it done in the next couple of days. My tax guy is probably gonna want to wring my neck.
Right. As we all are.
Uh, well, and of course now I can't come to you because, you're too busy for me. So anyway,
Everyone gets an extension. You get an extension and you get an extension.
um, okay. So for married couples, what are some general pros and cons of filing individually versus filing a combined return?
So, usually filing joint, I usually find that the couple together usually will have a better outcome because married filing separately, um it disallows some credits.
Okay.
So some credits, like student loan
Okay.
interest, cannot be deducted if you file married separately. The child and dependent care expenses, so some of those credits will be disallowed if you file married separately. So I would only suggest that clients file married separately if, let's say, the spouse has a large IRS balance, or with the state.
Right.
And I've seen that happen a lot. The spouse, the wife or the husband may say, "Oh no, I don't want to attach that to me."
Right.
Um, you
Understandable.
know, so yeah, or child support. So so sometimes they may, it may be better to file married separately.
Mm, yeah. Yes. Okay.
But
I'm not
I
married, so
tend to
that's
find that in filing married separately, one spouse would usually get a higher refund. The other spouse would end up owing.
I wonder if the spouse who gets the refund will share though. Hmm. You know what? Because I would think, I mean, based on the scenarios you described, but also if you're filing with a combined higher income that you could potentially owe more to, like irrespective of those other circumstances, right? I don't know.
Well, with a combined higher income, what also happens is your standard deduction would be increased.
Okay.
So so the standard deduction is, um, it reduces your income based on your filing status.
Okay.
So for instance, for someone filing single and married separately, the standard deduction is 13,000 for for 2023. It was 13,850, I believe.
Okay.
So that reduces your taxable income. But for married jointly, the standard deduction is 27,700, I believe. So it's a larger deduction. Also, if you're trying to itemize, you qualify for a larger deduction, married jointly.
I don't do any of this myself because like my eyes would start to glaze over. I can't. But again, that's why I have you here to explain. So please, like I said, folks, if you have any questions that I may not address, because I still have some more, then put them in the chat. Um, so okay, House of Al, I don't know what, but anyway, somebody, I'm just gonna interrupt my question asking for a second. Says being incorporated to insolvent institutions is a liability. Those suffer from easement. I don't know what he's talking about. Do you know what he's saying? Or she? Okay, never mind. All right, so let me ask a more straightforward question, right? ASAP 95 asks, are church donations, gift donations worth it nowadays? I had some tax experts say Trump took all that away.
Trump did not take that away. So, and I think many people are misinformed. When you
Okay.
when you make a donation, you are able to, well, you may be able to deduct it. In order to deduct it, you have to be able to itemize. So, itemize deductions basically would need to be more than your standard deduction for someone who is single, head of household, or or married filing jointly or separately. So your itemized deductions would include any mortgage interest paid, any property taxes paid, your state and local taxes from your W-2s, and your charitable donations. If those do not amount to more than the standard deduction, it won't even make a difference. It wouldn't benefit you to try to take the itemized deductions versus
Okay.
the standard deduction. So, I mean, an example: if everything that I just said, the property taxes, the property taxes to state and local taxes, your charitable deductions, if that only equals $15,000, okay, and you filing filing head of household, the standard deduction is 20,800. The 20,800 would benefit you more.
Right.
So then the charitable donations won't even matter.
So now, Angie asked, what is a standard deduction? But I assume that's dependent on your income and your filing status, right?
So the standard deduction is a deduction that IRS allows based on your filing status. So that reduces your taxable income.
Um, I wanted to ask you something. Oh, is that's for federal or state, or is it that's applicable to both types of taxes you may have to?
Standard
Yeah.
deduction.
Hmm.
There's a standard deduction for, yeah, for state as well. It's
What?
not the same amount.
Yeah, I was gonna say, but I assume it would differ depending
Yeah.
on. So now are you licensed to do taxes in like multiple states or only in Pennsylvania because you're based in Pennsylvania, right?
Mhm. The difference, and I'm 100% virtual, for anyone who's asking, but the difference in a CPA and an EA, is that CPAs are generally licensed in the state that they took their license.
Hmm.
As an EA, I'm licensed throughout the US.
Okay. 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 So moving on to my pre-written questions. Are there any common tax write-offs that the IRS will and will not accept?
Um, I've seen people try to write off entertainment expenses. Um,
Like,
they would just say entertainment, like, oh, I went to I went to a football game. Or I treated my client, to the Usher concert. It's like, no, that's not deductible.
well, what if it was like a meeting? No?
Yeah, I mean, and I tell people, I mean, if you wanna try it, you can, but I'm just telling you, what the law is. And a lot of times people will say, oh, you know what, my friend did this, or I saw on social media where they said that it could be done, and I'm
Right.
like, yeah, it's totally up to you,
They
like,
saw on TikTok.
yeah, right, TikTok total.
I, you know what? Okay, I'm gonna get to this later because I want to know who this.
Why are you remitting the debt through your? Okay, I don't know.
Okay, I, all right. I will address this person's questions later. Maybe if you don't have an answer, I definitely don't have an answer. I don't even like. I don't know.
Can you ask them to explain? I don't know.
Um, I'll get to that later. Anyway, I want to keep the questions, as like taxes for
Yeah.
dummies, basically.
Mm-hmm.
Like I said, if anyone has any more in-depth conversation or consultation that they would like to have as a client, right, or are interested in being a client post tax season, right, post April 15th, then you can contact Shauna directly. But in the meantime,
Oh, I
um,
will also say this.
mhm,
Other deductions that people. So, for instance, IRS will say if you have a business, IRS will say, okay, if it's ordinary and necessary in your line of business, then okay, it is deductible. A lot of people take the ordinary and necessary to the extreme. For instance, you might have a hairdresser.
mhm.
And, she said, oh, okay, well, I have to keep my hair done for my client. So that's a deduction. Like, no, you know,
It's not like
it doesn't work like,
isn't she promoting her business through her, through her styles and maintenance of a fresh do? No, that's not how that works. I don't know. I'm not a hairdresser, so that don't even apply to me. I'm just inquiring. So, um,
and the thing is, people try it, you
I'm
know,
sure they try all
but
type of stuff.
oh yeah, yeah.
So
I
you'll
mean,
have to.
I was telling you earlier that I had a client who was a truck driver,
Mm,
and and he had over $100,000 in deductions.
I'm not.
Um,
I could ask you how much he made because that's insane. I mean, that's insane.
but he thought by using all of these deductions that it would garner him a large refund, and
Or
it went down to zero. It went down to zero
or
because
would garner or
he
would
had no
garner an
tax.
audit,
Exactly, exactly,
which
exactly.
leads to my next question, right? Um, so what are common reasons? I think I just answered the question myself, but common reasons that returns get flagged for an audit, or are audits 100% random?
Not 100% random. An audit can happen for any reason. It could be a random audit. It could be a audit because, let's say, you have um, chose to take the American Opportunity Tax Credit for more than 4 years. That's a credit that you can only take, education credit that you can only take for 4 years. So different things. But especially you might have people who, I mean, and not may. There are people who make up fake businesses.
No.
And And so they make up fake businesses. And one thing, and when I see those taxpayers who come to me and I look at their tax return and they have all even numbers,
Mm.
and I'm like what in the world? Like, this is definitely, a red flag,
Do
you know.
then do you ever, like, in a situation like that, if it wasn't somebody that you previously worked with, would you like decline to work with them, or because that
So
can potentially create a problem for you, right?
I would work with them for that year, but again, I would basically say, okay, I need to know, about your business. I need to know, so I would get everything written.
Mm,
I do a lot through
mm,
emails,
mm.
just so I cover myself.
Right.
Because a lot of
So
times what happens is when the client gets audited, the first thing they say is, my tax preparer did it.
I was about to say, somebody in the ASAP 95 in the comments says, if you get your taxes done by a professional preparer and they get in trouble with the IRS for fraud, can they hold you accountable because you signed the papers? Like,
So
in a scenario where it's not it's the innocent taxpayer, relied on somebody who is,
actually, no, because it's on the taxpayer because they sign the return. So that's why I definitely would say make sure that that you understand everything on your tax return before you sign it. Make sure that whoever is preparing your return, make sure that they are signing the return, because there are people out here that are claiming to be tax preparers, but they are preparing taxes on TurboTax, and then it will say self-prepared.
is there a way, well, because of course, they send it to you for signature because I, do e-filing too, but then I would send it back. So until I get it and it's already been submitted, I won't know if they signed it or they have to sign it first.
That's fine at
Okay.
first.
Okay. Okay. I couldn't remember. I don't know.
Hmm.
Um,
Yeah, yeah.
okay.
The finance rebel, yeah, ghost preparers. That's what it's called.
Oh boy. Okay. So how long are you able to claim the earned income tax credit for your kids? My
So
son
the
is not
earned
a kid
income,
anymore.
the earned income tax credit is not based on age. It's based on income.
Oh, okay.
So, there are some instances where someone can get the earned income tax credit without any children, because it is basically a low income, a credit for low income taxpayers.
Aren't there aren't there is that not what I'm thinking of then
I'm talking about the child tax credit.
yeah, maybe that's what
Okay.
I was thinking of. I
So
thought
the
it was the
child
same.
tax, the child tax credit, um, 16 and under,
Okay.
for the child tax credit. Once they turn 17, I see a lot of parents just like, what, like, what's happening, because they lose basically $1,500 of a credit,
Right.
because the child tax credit was, about $2,000, and so they now get credit for other dependents once they are 17 and older, and that's $500.
Yeah, well, that was definitely a difference. But now, so, and what about when they're in college though? Can't you still get, you can still get something for,
The credit for other dependent. Uh-huh.
oh,
Yeah,
okay,
so
I see.
mhm.
Got you. I no, I thought if they were in school that there was something. I don't really, I'm honestly, I don't look at my taxes that closely. I'm like, is this good? Let me sign it. I know that he's, um, he's ethical, which is my concern. Like, of course,
Right.
like I don't want to have to owe them, but I want you to do whatever is appropriate because I don't want them to come back looking for me later either. You
Mhm.
did.
Mhm. Mhm.
All right. So speaking of that, is it better to claim a zero deduction deductions during the year to ensure um, or minimize the probability of you owing at tax time, like assuming you make, over a certain amount of money, or, do you think you should just try to get your little extra money during the year?
So a few years ago, maybe more than a few years ago, IRS changed the W-4s.
Okay.
So there are no more exemptions on a W-4. Though, so what it goes by is your filing status.
Okay.
So, what I'm seeing a lot this year and last year, many people are owing IRS because they have not updated their W-4. When you start to make a certain amount of money, and let's say if you have, business with business profits, you now need to have extra withholding. Um, so, if you look at your
Hmm.
W-4 on box 4, it's an additional withholding line.
Okay.
I know when I worked in corporate America and had a business, I basically, would increase that, every year so that, that maybe $100 each pay would come out, and that would cover the profit that I had in my business.
Okay.
Um, so you would, again, look at your W-4. You may need to increase the withholding on your W-4. Also, paying estimated taxes. So IRS is a pay-as-you-go system, meaning they want their money as you're making it. So, what they created was quarterly estimated tax payments. So these are payments that are made around April 15th, around June 15th, September 15th, and then January of 2025.
Okay.
So
Okay.
these payments um, um, will go against any 2024 balance due.
Okay.
So when you file your taxes for 2024, let's say if you made $300 estimated payments each quarter,
Hmm.
when you file your taxes, you have already paid in $1,200.
Okay. So what are the like thresholds for, you know, when they start to charging? I really don't pay attention. I'm have to be honest with you. Maybe I should do that. Yeah, anyway, so what are the thresholds like when it starts to have like you would have to do more withholding, or and are you're just randomly guesstimating, or like how much
So what
you
I
should
would
have?
do is, and what I try to do with many of my clients, I have them meet with me quarterly. So I have them
Okay.
meet with me quarterly. I'll have the, bookkeeping is total I just have to say that bookkeeping is one of the most important things, especially for all of the business owners.
Mm,
I will have them meet with me and give me their profit and loss for that quarter.
mm-hmm.
Um, Give me their last pay stubs for that quarter, and then I can estimate if they need to make a payment or not towards their estimated taxes.
Okay.
If if it looks like that they're trending to get a refund, then there would be no reason for them to make any estimated tax payments.
So what if it's not, if you're not a business owner and you have a corporate job or whatever the case, and you're earning a salary that is above whatever threshold you're describing, and you haven't updated a W-4, um like how do
So
you know?
so so I would say give me your last pay
Uh-huh.
stub, and then your last pay stub would give me your year to date, and it would give me the federal tax that's withheld, and then I would be able to tell if if okay, if this was the end of 2024,
Hmm.
you know would you end up owing IRS or not? so
Okay.
so so that's the information that I would need, just your pay stub.
So you would suggest then that a person, and now obviously if these people are your clients, then they're already paying you presumably, or these are like people that you do bookkeeping for, or like if I went to the person that typically prepares my taxes and ask him, do you think that's something he's going to charge me for, or he's just going to say, hey, I think you're going to owe. I know you can't really speak on what somebody else's business is, but I don't have my own business, so I'm just asking a question. You gonna charge me for that?
I mean, so I have clients who will pay for bookkeeping, and I'll throw that in there.
Okay.
Um so I am not going to tell everyone, okay, I'll do this for free, because I wouldn't be able to handle my paying
Yeah,
clients.
of course, I'm not suggesting that you do that. I was really asking for myself.
Mhm.
Like if at this point I need to file anyway, it's irrelevant. But I was just curious so I know moving forward,
And then also,
if
if you owed for 2020, 2022 or 2023, and you haven't made any changes, and you may get a bonus, then it's like you're doing the same thing over and over, and you're expecting a different result.
so what you're
Insanity.
trying to say is I'm crazy. Okay, got it. I heard you. That was nice. That was a nice way to say it though. See, this is why I needed you here. Um, okay, well, this is very helpful and useful to know. Thank you. Okay, so um, do you have, and I think you have kind of been sharing them already, but do you have any general tips on filing for new or small business owners?
Um, Definitely. The most important thing that one of the most important things that I would say is setting up your business correctly. I know, a lot of times, it was an LLC craze,
Right,
and everyone was setting up LLCs, like, oh, they told me if I got an LLC, it would reduce my
right,
taxes. The LLC does nothing for your taxes. It's basically just liability protection.
okay,
You're still taxed the same, so um but set up your business correctly. You always want to have an accountant, and you want to have a lawyer. Those are the two things that's very important. I would also say, in terms of Philadelphia residents,
hmm
we have to do federal, state, and city, city taxes for if
hmm
we have a business in
hmm
Philadelphia. So, a lot of times there are localities that may require, something to be done. So, so make sure that if you are depending on someone to handle that for you, that they understand, your needs.
right,
Uh, I don't know, I can't say that I know taxes on every state, but when I have a client who comes to me from a state that I haven't worked at, I do my research first.
right.
And then I will, So yeah, but definitely make sure your business is set up correctly. Make sure that also your bookkeeping. It's so important. Like in the past, I've had people come to me with a trash bag full of receipts.
Oh no.
And around this time of the year, like when it's tax season, and I'm like, you know, um,
Take your
now.
trash and get to stepping.
I mean, and you know what? The thing is, it's good because now I could say, "Oh no, I'm not doing that." But
Right,
before I would bust my behind, like, okay, I'm trying to get my business
right,
off the ground. Let
right.
me go ahead and do it. But yeah, like so what I wanted to do, this year is for more clients to become bookkeeping clients,
Okay.
um, because again, it's so important to have have records of your business. When the pandemic hit and people needed profit and loss statements, they, some people missed out on the PPP because they didn't know what a profit and loss statement was. You
Or they
know
made up a business and got
that too.
whatever
But yeah,
happened
yeah.
to those people.
Well, you know what? The government is still looking, so
Well, it ain't
um,
me. So in case Big Brother's watching, it ain't me. Okay, that was not me.
but yeah, yeah. So I mean, definitely, bookkeeping is definitely essential. And then making sure that you are compliant in filing taxes. You
Yes.
want to. A lot of times, I'll see grants being, out there, but you have to be compliant. It might be a state grant, but they want to see that you filed your state taxes, or a local grant, and they want to see that you filed, local taxes as well. So definitely put yourself in a position, to definitely get ahead. I think the woe is me is like out the window now, because we can definitely do the same things that many other nationalities do in our businesses.
We can. Well, listen, listen, we're not on here advocating anything unethical. So whatever y'all choose to do with the information that's been provided here, that's on you. So don't try to come back here saying, but so and so told me no they didn't. Don't try it. Okay? Anyway, don't even try it. Anyway, um okay, so Georgia's son says, son one, I need help right now with this tax stuff. Well, once again, I don't know how long you've been on, but Shauna is La Petite Tax Dame on Instagram, Facebook, and X.
Yes.
So yeah, so I will put her, her contact info in the chat, or you can feel free to do that yourself. But she did say that she's not accepting clients to file by April 15th. However, post that, or if you wanted to file an extension, right?
Yeah.
I don't want to speak for you
Yeah.
or
Yes.
misspeak. Okay.
Uh-huh. Definitely.
So, okay, ASAP 95 asks, are Jackson Hewitt or H&R Block Services a ripoff?
So, when I began doing taxes, I was in college. I worked a college job, and I went to H&R Block.
Mhm.
And just with that college job, they charged me like over $500.
Are you serious?
I was like, what in the world? So I was like, I don't think,
Yeah, that's crazy.
like, yeah, yeah. I thought that was too much.
Yeah,
So I said, you know what? I I want and at that time I was a single mother. So, so I said my purpose then was to make sure that, no other single mothers have to put up with, paying as
right,
much for tax preparation.
right,
And of course my purpose has grown, bigger since then, but that's the reason that I started out. So, sometimes, again, with Jackson Hewitt and H&R Block, you may get someone, to prepare your taxes who may not understand everything. So, it all depends. I would say it all depends. I mean, some people have been going there, for
right.
forever, and they like it.
Well, look, I'm sure that I assume the intent is to try to maximize the number of deductions within reason and minimize the liabilities and, and what you owe, right? So
Correct.
potentially.
Correct.
Um, um, okay. So this one is more specific for me, and I think you kind of touched on this already because I live in New Jersey and I work in New York. I'm getting taxed twice. So, is there anything I can do besides move to New York, which would be even more expensive, to minimize, being taxed double or not.
I hate New
Just
York,
SOL.
but I hate New York when it comes to taxes. But New York and Ohio, like, ugh. But
Now you tell
but
me.
for instance, like Pennsylvania and New Jersey, they have an agreement.
Okay.
So if you lived in New Jersey
Hmm.
and you worked in Pennsylvania,
Hmm.
let's say Philadelphia,
Hmm.
then you are able to file the New Jersey tax return and get any credits that you paid to Philadelphia. If New York New York and Jersey, I don't believe they have that agreement now. So you would need to file two state tax returns, a
Yeah.
a non-resident return for New York, and then a resident return for New Jersey. For the resident return for New Jersey, you would get credit of what you paid to New York.
Got you. Um, I mean, yeah, I was just wondering if, because I feel like, or maybe I imagine that this was the case, that like there was some way I could, pay pay income tax in one state as opposed to being taxed twice. But
Yeah, I mean,
yeah, no.
and I think the thing is, so you're generally, taxed. They will, depending on the HR department, they will tax you where you work at, and then where you live, you will end up, he says confusing.
Yeah.
Yeah. So, and then where you live, you have to pay taxes there.
So, Legend is the Elder. Do you live in Ohio? Because he says, why is Ohio bad for taxes?
Um, the Ohio tax code it's just something. Ohio, California is, yeah, it's something. Like, I think all tax professionals will agree to that.
So, um, Delaware, like what states don't have state, is it state tax or sales tax? Is it Delaware? Like I know I've heard people say, Delaware is a good place to incorporate a business because you don't have to pay some kind of tax. I don't know.
So yeah, let me clear that up. So many people think, oh, there's no income tax in Delaware.
Okay.
That's not right.
Okay.
There's no sales tax in Delaware.
Okay.
So, the thing is, like, I've seen where people who lived in Delaware and then worked in Philadelphia,
Hmm.
Pennsylvania.
Hmm.
Okay, they will end up owing Delaware taxes because the Delaware income tax rate is more than
Okay.
Pennsylvania.
Oh, okay. But you said it was sales tax that they don't have to pay, not income.
Yes,
Got it.
yes.
Got it.
But then, states like Texas. Now Texas is a little humdinger as well, but Texas does not have income tax. The thing with Texas is that it's a community property state. So what that means is, let's say if you and your spouse are filing married separately,
Hmm.
a portion of your income will need to go on your spouse's return regardless. So it has to be split.
Okay. So basically, before you move anywhere, you should take these things into consideration. I mean, unless you balling out of control, then none of this stuff really matters, right?
Definitely.
Although a lot of people who are balling like that like to, not pay taxes.
The other
So,
thing, what I see all the time is the filing status. I don't think people understand the filing status. People will say, "Oh, I'm head of household." Okay, so head of household means that you have a qualifying child
Mm-hmm.
or qualifying relative,
Mm-hmm.
and you provide over 50% of the cost of the home. Um, and so people say, okay, no, well, I'm single. Well, then you're single. You know, you're not head of household.
Right. So they can't be by themselves with no dependents and say they're the head of household, is what
Correct.
you're saying.
Correct.
Got
I mean, you may be the head of your household,
it.
but not for
Well, you
IRS.
get a bigger standard deduction, right, as the head of household as compared with a single person.
Correct.
Got it.
Correct.
Got it.
Correct.
Um, so folks in the chat, because that was the last of my questions. Do any of the folks in the chat have any more specific questions for my tax expert guest? Now what does who is an enrolled agent? And please explain to them again what that is for the people who joined more recently.
Sure, sure. An enrolled agent is a certification that that I took. I believe in 2020, and I specialize in tax. I specialize in tax resolution, so I am able to represent my clients before the IRS.
So
So,
if they have some kind of issue where they,
mhm,
oh, you
like
know what? I actually do have
for
another
instance,
question for you.
like an offer in compromise. An offer in compromise would be, let's say that you have $50,000 in tax debt,
Hmm.
and and we go over your financials, and then I say, okay, can you pay them, maybe 15,000 dollars, and then they wipe off the debt. Sometimes they, IRS would allow offering compromise if the right scenario works.
Hmm. Okay.
So that installment agreements, many times I may have clients who will, who have a multitude of issues. I'm able to call IRS on their behalf, and and work out any issues that they are having with IRS.
Okay. So this is out like so okay, so you do tax preparation, you do accounting, and you also are an enrolled agent, so you can represent clients and individuals or businesses if they have an issue um
Correct.
because they haven't been paying or something like that.
Yes.
Um so another question actually that just occurred to me because my son was asking like well, maybe I shouldn't say this on here. Um, he's I'm gonna talk to you about this later.
Okay.
What is the threshold of like earning, just generally speaking? What is the threshold of earning before you have to pay taxes? Like the
So,
lower threshold.
mhm. so the standard deduction. Trying to remember. So if you receive a 1099,
Mm-hmm.
then and the 1099 is $600 or more,
Mm-hmm.
then you have to report that.
Okay.
Uh, if you receive income that's more than the standard deduction for for your filing status, then you have to report that.
Okay. Because I used to, well, I thought that if you earn under a certain amount of money, like you didn't have to. I mean, you're
So the
still a
standard,
student,
uh-huh, uh-huh,
so.
well, so with him being a student,
Hmm.
because he's in college,
Hmm.
and would you be claiming him?
Hmm.
Yeah, yeah. So because he's in college, he can basically work, and he does not have to file a tax return. He can file a tax return just to get back what the federal tax withholding in box 2 of his, of his W-2. Um, and but he if he does file, he would need to indicate that he is being claimed by a dependent. I've seen where that happened, where the college student they was gung ho about filing for the first time, and they went ahead and filed, and then when the mother came to me to file, trying to claim the student, it rejected. And she's like, oh, no, no, I took
Right.
care of him all year. Like, so.
Right. No. Um, I was thinking that he didn't have to file because because of the amount of money that he had made. But um
Yeah, as a
mhm.
student, as long as he is a student and is in school,
Yep.
um, then he's fine.
Okay, cool. Say less. Especially since we right up on that deadline. Anyway, so let me see if oh, so Peach Henry Photo asks if you keep books. Oh, you remember Chocolate Drop? Chocolate Drop. Do you remember Shauna from the Flavor in Your Ear
Oh yeah.
video fame? So he's asking if you do bookkeeping too, which I'll let you answer that.
Yes, I definitely do bookkeeping. I offer monthly bookkeeping subscriptions. I also I I will do annual or back bookkeeping, but it has to be after tax season. Usually, when I do that, I hate doing bookkeeping during tax season.
Um, okay, I see another question. So, okay. ASAP 95 says, I've I have a question. I heard those tax relief companies such as Optima Tax Relief are more trouble than they're worth. Is this true or not?
So, I mean, can't really talk about the competition.
Right.
You know,
Just need to go see my girl, right?
yeah, yeah, but basically, I do the same things that enrolled agents generally do the same thing that Optimal do, and CPAs.
See, you already getting potential new clients. George's
Okay,
sunglasses.
George.
Oh, is it somebody you
No,
know?
no,
Oh,
no, no.
okay. All right, see? Bringing
Thank you.
bringing bringing business and clients together. I love it. Okay. So, are there any last questions? Or is there anything else that you want to share, any other gems, words of wisdom that you'd like to share with the folks before we wrap up here?
Mhm. Um, I know a lot of times people tend to go price shopping. They want to see who the cheapest person is, and the cheapest person may not be the best person. So you want to do your research. You definitely want to. IRS has a website of well, on IRS's website there are a tax professional directory. You want to make sure that your tax professional is in that directory. If not, I wouldn't even use them. Um, you also I encourage all keeping good records. I encourage all taxpayers to create an account on IRS's website. You would go to irs.gov, and you would create an account. It takes about less than 10 minutes. You might have to do a screenshot just to make sure that it's you, but you are able to see, anything that you owe, all of your transcripts. They will definitely be on IRS's website once you create the account. Someone said, asked me a question about good bookkeeping. So, sometimes smaller companies, they can't afford QuickBooks.
Mhm.
or they can't afford a bookkeeper. And I understand that. I've been there. What I will do is I will send an Excel spreadsheet that that was created, and and it will have your income, and then you'll put down there a list of your expenses. And so, but it's more manual,
Mhm.
but it's a way to get started to to make sure that you are keeping your books in check. But definitely, I would say you want to speak with a tax professional. You want to definitely, or talk to a bookkeeper, and and make sure that have a consultation, and make sure that what you are doing is correct. That you aren't doing this for year on year out, and you're doing it the wrong way. You don't want to mix and mingle your business and your personal funds. You want to make sure that you have a separate bank account. IRS does not like commingling of funds. If you were ever called in for an audit and you're only working out of your personal account, it's going to be a total mess.
Mhm.
They're going to have you prove that your personal income is not business income. And no one wants that.
Right. Um, okay.
Hmm.
A couple more questions here. SnackFit 914 says, how do you claim wins and losses casino wise?
Yes. So usually the casino would give you either the pink slip, or if you won, more, they would give you something, and I know in PA it's called, usually it's the 1099G. um and I could get it off, I would get it off the PA website.
Mhm.
But yeah, but you have to keep, track as well of your, of your wins. Now, your losses are only deductible up to the amount of your winnings. So if you lost $30,000, but you won 20, you can only deduct that 20.
Okay. Um, okay. So my aunt asked for some tips on keeping good records during the year to make filing taxes easier.
So I mean, and I think I kind of mentioned it for
Businesses?
businesses,
Yeah.
but for individuals,
Hmm.
I would say get a accordion folder.
Hmm.
um every time you get something in, put it in that folder. And so so at the the beginning of January, when everything, you have everything, then you're going to now take everything that you received to your tax preparer.
What are the typical types of like receipts? Because of course, this is a situation where you would want to have evidence of whatever purchases or, earnings or whatever it is that you want to itemize. What are the types of receipts that you need to make sure you're saving? Or should you just save every receipt and then file them away? Because I'm always
So you
throwing
definitely,
receipts away.
uh-huh. Without a business, the only receipts that I would hold on to would be if I was trying to claim like medical deductions,
Okay.
or like the charitable donations. But if you have rental properties, if you have, if you have other businesses, then I would definitely say you want to keep all of your receipts for at least 5 to 7 years in the event that you are audited by IRS. IRS, they won't just go by your bank statements, because you could buy something from Amazon,
Mm-hmm.
and on your bank statements it's just going to say Amazon. It's not going to say what the item was.
Right.
So so you want to make sure, even if it's something that came into your email, you want basically, you want to, print that out. There are different types of apps out there that will scan receipts.
I,
Um,
yep, I was going to ask you about scanning them instead because, again, a lot of people don't like to keep a lot of, I mean,
paper.
receipts can get
I
all
mean, and,
crumpled
and the
up
paper
and
and the paper
yeah,
fades.
yep,
Yeah.
exactly. Yep.
Yeah. So yeah, that there are different type of companies that will, that you can scan the receipts, and it will, go right into your folder that you create on your computer.
Uh, you don't happen to, oh, I mean, people can search on their own, but I mean, I didn't know if there was anyone that you might suggest that you think is better. Um,
Hmm. I mean, I guess
Tell them to
I'm big at
cut you a check.
I'm big at automating, the whole process. So that's why on my, my end, and for my clients, I, tend to say, QuickBooks. But for the receipts, um,
You
yeah,
mentioned in apps. That's why I was asking.
mm-hmm. I mean, there's so many. Like, I see some on Instagram when I'm scrolling, and companies, that will, or apps. So,
Um, okay, so I think, okay, I think somebody kind of, you already sort of responded to that, but okay. One last question from ASAP 95. He says he keeps at least 5 years worth of tax returns to cover himself. Is that good practice?
um, yeah. You definitely want to make sure that that you have, because you never know. You might be trying to buy a house, or something else, and they may want more than 2 years of a tax return. The other thing is, again, if you didn't keep your tax returns, you can also go on IRS's website once you created your account, and you can always pull, the transcripts. I think it's the last 3 years probably. So yeah, but yeah, and definitely make sure that any years prior to that you are definitely shredding.
Okay. Um, I think I skipped a question here. Uh, you may have responded to this or something similar. Do certain states tax winnings from what? Do certain states tax winnings from online gambling?
I believe all of them do. I believe it's taxable. Yeah, tax. Yeah.
Okay. Um, hold on. There was another one
Now,
I
if
saw.
if the online gambling garnered a a tax form, then it would be taxable income. I mean, I haven't had anyone come to me from, like, what is that, Bet Casino,
DraftKings.
Draft King?
Yeah.
Yeah. So I'm not sure, but yeah, if a tax form was issued based on those winnings, then it definitely would be taxable.
Okay.
But
So
yeah, and
like,
also, you make sure that one important thing I kind of forgot. So, beginning of 2024, FinCEN, which is the Financial Crimes Enforcement Network, it's a leg of the Department of Treasury. It's not IRS, but their goal is to combat money laundering. So because of that, they want to know. Well, a lot of the money launderers are people hiding behind LLCs. So LLCs are required now to file a beneficial ownership information report.
what
The
is that?
A BOI report is a report. I mean, I finished it within 5 to 7 minutes. Your name, your business name, your address, the business address, the state that it was created in, and then you uploaded your ID. So for any LLC who was established prior to 2024, prior to 1/1/2024, you have up through 1/1/2025 to file this report, or you will face $500 a day in penalties.
Right.
For any LLCs who were created after 1/1/2024, you have 90 days from the date of your formation to file, or either you would still face that same penalty, $500 per
Well,
day.
would, like, let's say if decided tomorrow I want to start an LLC, would whomever, is helping me with setup of this, they wouldn't tell me this is in for this, whatever the form
So,
was that you said I need to submit?
so who wouldn't tell you?
I don't know. Just the people, whoever the
Uh,
people are.
the people. So when you start the LLC, usually that is, and that's why I tell people go to a tax professional
Well, right,
instead of
because you
instead of
can do it.
paying.
You can do it through like legal Zoom and stuff like that, right? Yeah. So,
But even now, so I do contract work for a company called 1-800 Accountant.
mhm,
And so a lot of the legal Zoom people, come over. Well, they have a partnership with LegalZoom.
mhm.
So a lot of the LegalZoom people come over to get their taxes done with 1-800 Accountant.
Okay.
And so, again, the LegalZoom will charge you for the BOI report. They will, the BOI report is free. Um, if you do it yourself.
Okay.
So again, LegalZoom, it's okay, it's okay to use them. Just you need to make sure that, I would say, before going to LegalZoom, that you sit down and speak with a lawyer.
Okay. Um. Okay. So this, I think, is the last question I saw here. So I'm gonna go ahead and um ask you this. Oops, and then we will wrap up. Okay, so Wiz Wisdom is Power says, as a day trader, when I gain profit, believe the profit in the broker account, do I have to claim that as income? Or is it just when I remove profit out of the broker account into a personal account?
So usually with the brokerage, when you sell the uh when you sell any stocks, that's the taxable event.
Okay.
So just moving it is not a taxable event. But selling the stocks is when it's taxable, and then that's when you will get a 1099-B from your brokerage and have to report that.
So regardless of the amount of money it might be, like even if it's a small amount of money?
So if it yeah, yeah, if it's in there once you sell it, I mean, a lot of times I will have 18, 19 page 1099-B with all of these different stocks.
Mm-hmm.
And it amounts to about $10 of a gain. But
Wow.
I'm
Okay.
sitting up there like inputting, like, oh my gosh, oh my gosh.
That's crazy. Um, okay. I think that was the last question I saw on here. So, um, of course, I appreciate you joining and sharing all of this wonderful insight on um the dreaded T word, and breaking it down and letting it be broke for the viewers and myself. Once again, go follow La Petite Tax Dame on IG, Facebook, and X. Um, and Shauna is accepting new clients after the 15th. So if you haven't already filed your taxes, you better file an extension. Remind them again what the form is.
4868.
Okay. She said if you make 79,000 or less, you can
You
file
can
it.
use IRS free e-file.
Above that amount, you have to fill out the form, print it out, and mail it to be postmarked by April 15th. Did I get that right?
Or go to your tax professional and they can do it online
Or that.
with their tax software. Hmm.
Get a professional. Don't try this at home. That's the bottom line. So, um, thank you so much. Thank you again. I really appreciate your time and your insight and all this wonderful information. Sounds like there's some folks who might be reaching out to you. So, just make sure you don't bombard my girl until after the 15th.
Yep. After
Um,
the 15th, I'm all yours.
Um, and oh, hold on, and this lovely young lady is a fellow Philly John, Aries in the house. I gotta
Yes.
pick up
Yeah.
my Aries season. Um, so yeah, thank you, lovely, and go follow my girl. Uh, um, you can see yourself out because I don't know how to.
Thank you. Let me get back to these taxes. See you all.
Thank you for taking. You know what? I didn't even think about that. Thank you. I appreciate you taking your time out seriously. Um,
Love you. Have a good night.
you too. Okay, folks. So, with that said, hopefully you already filed, but if you didn't, handle that ASAP. And I'm talking to myself as well. And I appreciate y'all hanging out with me and Shauna. I will see y'all next week. Happy hump day, happy Wednesday. And I'm out. Oh, full episode will be available on my YouTube, probably sometime between tonight, more likely tomorrow. So if you didn't get to take any notes and you missed anything, you can watch it again there. And I'm Becky Brown Girl on YouTube as well. So appreciate y'all. And I'm out. Peace, two fingers.